let's get stock specific now and talk about Max Estates. Nitin Kansal, the CFO at the company, is joining us from the 21st Motilal Oswal Annual Global Investor Conference. Our discussion will be focused on the following points: pre-sales booking value and annuity rental income trajectory, commercial projects in operations, and indicative growth pipeline in the near term. So these are some points we'd like to discuss with the management, apart from the other questions. So let's get started. Nitin, good afternoon. Thank you so much for joining in. Well, there's 6,000 to 6,500 crore pre-sales target that you have in FY26. What is the pipeline for this guidance that you have? And will it be all luxury projects? Will it be a mix? What kind of price points are you focusing on?
Thank you. Thank you so much for getting me on the show. So in the current year, what we are planning to do is a launch of close to 9,500 crores across the key markets of Delhi-NCR in Noida and Gurgaon. This is across 3 projects. Against this 9,500 crores, we're expecting to do a sale of 6,000 to 6,500 crores. These projects are expected to be launched in the second half of the current financial year, and these would be more in the price range of 20 to 23,000 rupees a square foot, in line with what we have done in these micro markets area.
Nitin, good afternoon. Thank you for joining in. What would be your rental income projection as well? You have a rental potential of 725 crore. Where do you stand at currently, and by when do you expect to reach that mark? And what would that do to your consolidated debt? What is that number like right now, and does that trend down as the year goes forward?
Yeah, so as we speak, we are currently in a rental run rate of close to 150 crores. What we have projected is by FY29, we would have a complete rental portfolio of close to 723 crores. We expect these numbers to be gradually scaled up in FY28 and 29. In our commercial portfolio, currently we have got New York Life Insurance Company as a 49% partner. This rental is currently operating at an EBITDA margins of 90 to 95% spread across Noida and Gurgaon.
Okay.
The current debt which we have on the books is around... Yeah, the current debt which we have on the books is on 30th June is approx 1,500 crores. This is predominantly on account of commercial assets. Of this, around 900 crores is towards lease rental discounting, and the balance is towards the construction and the finance. The important point to note over here is, against this rest of 1,500 crores, we are having a cash balance of close to 1,650 crores, resulting in a net cash positive of close to 150 CR.
All right. Are you expecting any more investments coming in from New York Life, Nitin? Is it something which is on the cards? And this 725 crore of potential that you're seeing in your lease assets, what kind of portfolio will you be seeing? What will the size of portfolio be in that case?
So we would be looking at a total portfolio size of in the range of 6 to 7 million square feet once this entire project is completed and delivered. New York Life, as we speak, has already committed a total capital of close to 1,800 crores with us, of which they have already deployed close to 1,600 crores. They have been our partners in all our commercial assets, having a 49% shareholding, and they are also our shareholders at the holding company, holding 21% shareholding. They evaluate each project on an individual basis and deploy accordingly.
But Nitin, we are almost 2/3 of the way into the current quarter as well. How has the demand situation been on the ground? And I particularly ask you this question because of these global uncertainties that we are currently surrounded by, and that would or may impact certain sectors. We have also seen layoffs being announced by a few major companies in the country. What does that do to demand on ground, especially within your commercial portfolio?
So although it does have a negative sentiment bearing in case we see layoffs happening in the tech sector, but what we have seen in our portfolio currently is we have not seen any impact. Our rental portfolio currently stand at 100% leased, with a strong demand coming from the GCCs. As we speak today, our rental portfolio entirely is leased, getting a premium of 30 to 35% over the micro market. What we believe a quality product is able to command a premium remains kind of neutral to the demand vagaries at this point of time.
Got it. Nitin, this is about the quality products that you would be providing in the commercial portfolio, right? But the other problem that has been happening in the NCR region, that's where your majority portfolio also is present, is the pricing premium. The fear is that pricing premium would go down. You will not be able to, or the builders will not be able to take price hikes the way they have been. What's your take on that? And secondly, while you can build a quality product, the infrastructure may not be that great, because whatever we've been seeing with rains across Gurgaon and Noida, even across flats which are ranging 50 to 100 crore rupees, but the infrastructure is not supporting that. What happens to pricing and demand in that case?
See, what happens, infrastructure does pose a challenge. As you would have seen, yesterday's rains kind of exposed the infrastructure challenges at Gurgaon. But having said that, there has been a significant progress which is being made on the infrastructure side. But as far as our demand is concerned, what we believe is that we are able to provide a significant value add to the customer, which kind of protects the demand which comes to us. Furthermore, we have also been able to segment the market in the senior living and the normal residential market, which kind of helps us and protects our prices and demand both.
So based on all of this, Nitin, how does FY26 shape up for you? Is there a collection guidance figure that you have zeroed in on? If you could tell us more about that.
Yeah, sure, Homas. In the current year, we have given a guidance of a collection of close to 2,600 crores. This 2,600 crores is made up of two components. We have a component of the inventory which we have already sold, for which we are expecting a collection to be in the range of 1,500 crores. And as we speak today, we have already made a collection of close to 450 crore against that. We're expecting another collection of 1,200 crores to come from the new sales. Since I previously mentioned, we have a guidance of 6,000 to 6,500 crore rupees for the year, and we do an equally distributed collection plans. We're expecting 1,200 crores to come from the new sales, which is expected to come in the second half of the current financial. So all told, we're looking at a number of 2,600, of which we've already collected close to 400 crore rupees.
All right, Nitin. Thank you so much for sparing time and joining us today. Wish you good luck for the rest of the year as well. Nitin Kansal there of Max Estates joining us from the sidelines of the 21st Motilal Oswal Annual Global Investor Conference. By the way, the market